Hello traders, welcome back to my channel. Today, I'll walk you through a complete breakdown of the compounding strategy, the correct way to apply it, the safest way to protect your capital, and the most effective way to maximize your results. Starting with a $400 balance, I'll show you everything, from reading market structure with precision, identifying the highest probability entry points, managing risk with discipline, all the way to executing each compounding step with accuracy. Nothing will be skipped. I'll explain it as clearly as if you were sitting right here with me, learning face to face. So make sure you subscribe, turn on the notification bell, and watch until the very end, because every point I share here could change the way you trade forever. The first step in setting up this strategy is to apply 3 moving average indicators to your chart. Start with a 7-period moving average in green, which will help you monitor short-term price movements. Next, add a 20-period moving average in yellow to capture the medium-term market trend. Finally, place a 60-period moving average in red to identify the long-term direction. Alongside these include the MACD indicator with its default parameters. This will serve as a confirmation tool for both momentum and overall market trend. Alright traders, the application of this strategy is straightforward, but it demands absolute discipline in execution. Step 1. Focus on the green line on your chart. This is the 7-period moving average. It acts as both your trend guide and your primary signal trigger. When the green line crosses the yellow line, the 20-period MA, that's your cue to enter a trade. If the green line crosses above the yellow line, that's a buy signal. If the green line crosses below the yellow line, that's a sell signal. Step 2. If you observe more than 3 consecutive candles closing either above or below the green line, it often signals a strong trend. In such cases, you can follow the trend direction confidently. Step 3. The red line, the 60-period moving average, serves as dynamic support or resistance. When the last candle touches the red line, the next candle often reacts with a bounce, creating an opportunity for a well-timed entry. Step 4. Use the MACD default settings as your momentum confirmation tool. If the MACD shows a crossover, take it as an additional layer of confirmation, aligning it with the direction of the green line's crossover. By applying these 4 principles consistently, this compounding strategy can become one of the most reliable and profitable tools in your trading arsenal. Now let's move straight into the live trading session. I'll demonstrate this strategy in real market conditions, so you can see exactly how to implement it step by step. Watch carefully. Even the smallest details can have a huge impact on your results. Alright traders, I've decided to take a buy position here, and let me break down exactly why. First, notice how the red line, which acts as dynamic support, has been broken by price action. A breakout above the red line often signals a potential shift in momentum from the previous trend into a stronger new trend. Second, right after the breakout, we can see 3 consecutive candles with a consistent structure, all closing above the green line. This pattern indicates steady buying pressure, and the more consecutive candles we get in the same direction, the higher the probability that the trend will continue. Third, the appearance of a Marubozu candle immediately after reinforces this bias. A Marubozu with little to no wicks shows complete dominance from the buyers, meaning the price is likely to push higher in the next candle. With these 3 technical reasons, I decided to execute a buy trade. And as expected, the position closed in profit. Now, let's reopen the market and look for our next trading opportunity. Alright traders, this time I decided to take a sell position, and here's the detailed reasoning. First, we observed a crossover in the moving averages. The green line crossed below the yellow line. This crossover is a classic early signal of a potential shift from bullish to bearish momentum, especially when it occurs after a rally that starts to weaken. Second, this crossover happened in a price area that had already shown signs of weakness, meaning selling pressure was beginning to dominate over buying pressure. The sharper the green line cuts downward, the stronger the potential for a continued price drop. With these confirmations in place, I executed the sell trade. And as expected, the position closed in profit. Now let's reopen the market and search for our next opportunity. All right, traders, this time I decided to enter a buy position, and here's my detailed reasoning. First, the market is clearly still in an upward trend. The overall price structure continues to form higher highs and higher lows, indicating that the bullish momentum remains intact. Second, after the recent rally, the price experienced a healthy pullback. From that pullback, 3 consecutive bullish candles formed, signaling that buyers were regaining control after the temporary drop. Third, following those 3 bullish candles, a correction candle appeared, but it closed above the green line. This is a crucial sign that the dynamic support from the green line is still holding, and the price is likely to continue moving upward in line with the main trend. Okay, let's see the results. And yes, as expected, the trade closed in profit. Now, let's keep scanning the market for the next opportunity. All right, traders, this time I decided to take a sell position because we received a strong signal from the MACD indicator. First, we observed a crossover on the MACD, where the signal line crossed below the main line. This type of crossover typically indicates a shift in momentum from bullish to bearish, especially if it occurs in a price area that had already shown signs of weakness. Second, the MACD histogram also began moving into negative territory right after the crossover. This further confirms that selling pressure is starting to dominate the market. Third, when looking at the price action on the chart, the candles following this crossover showed consistent downward movement, which strengthens the bearish bias. With the combination of the MACD crossover, the histogram shift, and price action confirmation, I decided to execute a sell trade. We monitored the move, and as expected, the trade closed in profit. Now let's reopen the market and look for our next opportunity. All right, traders, I decided to take another sell position because we received a follow-up signal from the MACD indicator. This time, the MACD showed another crossover, with the signal line crossing below the main line for the second time. A repeated crossover like this often indicates that bearish momentum is continuing after a brief pullback. In addition, the MACD histogram has widened again in the negative zone, reinforcing the indication that selling pressure is still in control. This pattern typically signals a trend continuation rather than just a short-term reversal. With this combination, I decided to execute a sell trade. We monitored the move, and as expected, the trade closed in profit. Now let's open the market again and look for our next setup. All right, traders. This time, I decided to enter a buy position because we have 2 strong confirmation signals. First, on the price chart, we can see 3 consecutive candles moving in the same direction. This is a strong indication that the trend has consistent momentum. Such a pattern often suggests that the move will continue in the same direction, especially when there's no significant resistance in the nearby price area. Second, The MACD indicator shows a bullish crossover where the MACD line crosses above the signal line. When this crossover is accompanied by a histogram expanding in the positive zone, it indicates increasing buying strength. When a 3-candle continuation pattern appears together with a bullish MACD signal, the probability of an upward move becomes much higher. This combination gives us strong confidence to enter a buy trade. We monitored the move, and as expected, the price climbed according to the analysis, and this trade closed in profit. Now let's reopen the market and look for the next opportunity. Alright, this time I decided to enter a buy position because we have a clear bounce signal from the red line on the chart, which is the 60-period moving average. We use this as a dynamic support that often acts as a price rebound point during an uptrend. On the last candle, we can see price dropped and touched this red line, then formed a lower wick indicating buying pressure at that level. Interestingly, if we look at the previous candle, we see the same pattern. Price touched the red line and then bounced strongly upward. This confirms that the red line is currently acting effectively as a support. With the bounce history already established, the probability of another rebound is significantly higher. Based on this analysis, I entered a buy trade, and as expected, price bounced as predicted, making this trade profitable. Let's continue and look for the next market opportunity. Alright traders, this time I entered a sell position because price has reached a strong resistance area. This is a level where price tends to stall and struggle to break higher, as many market participants place their sell orders here. Looking at the chart, we can see that price has touched this level multiple times before and bounced downward, confirming it as a valid resistance zone. Based on this technical confluence, I decided to go sell, and as expected, price quickly corrected downward, making this trade profitable. Okay, since I've already taken quite a number of trades today, I've decided to stop trading for this session. Remember, discipline is not only about knowing when to enter a trade, but also knowing when to stop. I hope this video has been useful and that you've gained a clear understanding of the strategy I shared. If you'd like to learn this strategy in more depth, receive direct mentorship, and accelerate your trading progress, you can join my VIP group, Mr. Rich. See you in the next trading session, and always stay disciplined in managing your risk.